Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. It was another poor session for the euro, lost about half a penny. It stuck its nose down below 118, but was able to hold that level through the rest of the session. And then the dollar index did and has held out above 93, but it did trade to a new swing high for the fourth session in a row after breaking out of that consolidation pattern, that longer dated consolidation pattern. This morning, ECB President Mario Draghi spoke. Markets didn't move much on him, but building permits, housing starts were mixed. And Fed President Bostic, he spoke. He did and became at least the third Fed president in as many days to talk about the inverted yield curve. The dollar softened a little bit around that time, but ultimately held ground, finishing up about 0.2 on the session. Industrial production a little later in the morning beat expectations. You know, this trend here is the path of least resistance higher in the dollar, the path of least resistance lower in the euro. You can't fight this, but some of the levels we're looking at, and the fact that we do not think the dollar stays higher and we do not think the euro stays lower on the year, but some of the levels we're looking at for the dollar right above 94, 94.20, it's an area we would look to sell it at that point. Down below in the euro, 117.35 is a major three-star support we've had in the FX Rundown. So those are some of the levels we're looking at to what's become a trend to now become a counter trend trade. So keep that in mind. Moving on to the yen had a quiet session, or more or less a quiet session, held ground near unchanged. We have a support level in the yen, 97.73. That's held. Ultimately, the higher treasury yields are holding back any type of gains the yen could see. But GDP out of Japan missed last night too, so that also has added to a little bit of pressure. So the yen, in fact, that it held ground today, and also in the face of rising equity markets, was fairly impressive. Still, we cannot make a case for buying the yen until it gets back above the 200-day moving average around 91.70. It's about a penny higher or a point higher for the yen. Moving on to the commodity currencies, the Aussie and the Canadian both traded up about half a penny on the session. Last night, the data out of Australia wasn't really great, but it did bottom out and start reversing late in the evening. The price action had started to firm up and through the morning. Saw a good spike as some of the metals and energies moved well, but also support coming from the Canadian dollar as well. Strong manufacturing sales. The Canadian dollar saw also support as crude oil held ground and gasoline traded higher. Gasoline, as you know, if you've been listening to some of our other commentary, it's a trade that we've loved. It's worked out really well here and through today on those higher prices. But back to the currencies tonight, Australia, look out for employment data. It's going to bring some volatility. The reversal off of yesterday's low and into today could get some momentum if it has some fundamentals favoring that momentum for the Aussie. Look for that. And then with Canada, tomorrow some data coming out with the ADP payrolls. Not a huge number because the jobs number was last Friday, but that was a poor read on jobs last Friday, and something from the ADP that's better could help get a little more momentum for the Canadian. It's one of those that if the Canadian stays out above 78, we can make the case for being long the Canadian. No news on NAFTA. It doesn't look like we're going to see anything, but that's also becoming a wild card. Give us a call. We're here to talk about these currencies. Shoot us an email as well. Our phone number 312-278-0500. Emails work great to help with your currency questions or anything else in the market. 312-278-0500. Again, that's the phone number, but the email address is info@bluelinefutures.com. Remember to check our website for updates, and remember that futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.